Ladies and gentlemen, Greg Michalowski from ForexLive.com. This is Morning Forex Technical Report, where I take a look at some of the technicals that are driving the currency market. So let's get started. I always hope that the technicals do drive the markets, but sometimes they get a little bit messed up as markets chop up and down. Taking a look at the euro versus US dollar over the last 3 or 4 or so trading days, the market has been moving to the downside, to the upside, 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 to the downside, and back to the upside here right before the initial jobs claims and the Philly Fed numbers at 8:30. The dollar took a move to the upside, breaking below the 100 and 200 hour moving averages in the process and saying, get out of this up and down consolidation here that was driving the market during the London session. But then the Philly Fed manufacturing index came in much weaker than expectations. And what do we see? We see the dollar moving lower. We're seeing yields move lower as well. The 2 year is now down around 10 basis points. The 10 year is down minus 6.1 basis points. Back and forth, back and forth. We do have a lot of Fed speakers out here today, and they've been harping on the idea that inflation is too high, whereas we get numbers like this and we get things like oil prices moving back down to the lowest level since the OPEC Plus production cut announcement earlier this month. And we start to think, well, maybe inflation is coming down. And then we get ideas that the economy is weakening too much. And then we get ideas that the economy is too strong. So you can understand fundamentally and also technically, is it being reflected in the prices, that the market just doesn't know which way it wants to go. So it is frustrating as a trader. I wish I could make it better for you all, but we just got to live with it and understand that, don't fall in love with the market. Try to fall in like with the market and take what you can get here and there and everywhere and hope for the best. So back to the technicals. What I see in this chart here is this area right through here where we have a swing high, sort of a swing low there, swing low, I see there, swing highs right here, swing high, swing high, swing high, swing high, swing high, all in between these two lines right here. I didn't make it yellow, but 109.72, 109.827. That's been more of a less a ceiling over the last 3 trading days, and then you can go back in time and look at other levels within that area. If the market is going to go higher now, a lower dollar, we need to get and stay above that area, and then we'll start to look toward this other swing area. These are levels that we're familiar with. We talked about it in prior videos, so 110 area, obviously a natural level, and also a level that was a ceiling here, and then became a floor, and then became a ceiling again. So that would be the other targets on the top side. In between, below that is the 100 and 200 hour moving averages, which, as you can see, has been chopped around. And earlier, before the numbers, the dollar traders, had a wild idea and took the dollar higher into this swing area down through here, where we have a ceiling here. Then became a little bit of a floor here, and then a ceiling again, and so on and so forth. And we sort of messed it up in earlier trading this week on both Monday and yesterday. Market moved below that area, looked like it was going to go lower, but didn't. Reverse back to the upside, moved all the way up to the 100 hour moving average. So this area right here is our support. But right now, with the dollar moving back to the downside with the Philly Fed index and the market chopping around, I got to say the bias is more to the upside once again, above the 100 and 200 hour moving averages. It is what it is. If you don't like it, then just don't trade it. But lots of arrows there. You can see. I'm sorry for messing up the chart, but watch the 109.827. That needs to be broken in order to increase the bullish bias. We're going to be trading 109.878 at the moment. Take a look at the dollar versus yen, and this is a 4-hour chart in this chart. And as I mentioned yesterday in this report, for the reason that this chart is more important is because you can look back in time and see how this was a ceiling back here. This is a floor over here. Then it became a ceiling again. And in trading yesterday, the market became a ceiling once again against that swing area and rotated back to the downside. So the sellers pushed the market to the downside. We moved down to a low here yesterday near the 134.25, and then rotated back to the upside. And as you can see, we're trading now to the lowest level going back to, I guess that's yesterday's trade. It's still yesterday's trade right here. Here we have this 50% retracement down here that is going to be our target, and also swing area right through here between 133.74 and 133.87. Let's take a look at the hourly chart just to see where the 100 and 200 hour moving average. You can see, this is somewhat important, is that we are testing the 100 hour moving average. That's this blue line right here, 134.22. If the price were to move below that level with more momentum, we should see further selling pressure. This is that swing area down and the 50% retracement down near the 133.74 to 87 level, and the 200 hour moving average is moving up toward that level. It'll be there in a couple hours, so that is going to be another key target on the downside if the market should break below the 100 hour moving average. So key support being tested here in the dollar versus yen, right at the 100 hour moving average. Be aware, be prepared. The sterling versus US dollar, that pair also tried to move below the 100 hour moving average pre-data. Then the Philly Fed number and the initial claims forced the dollar back to the downside. We're currently back trading above the 200, 100 hour moving average. It looks very similar to the euro versus US dollar chart, in that the 100 and 200 hour moving averages are in play, and the market is chopping above and below those two moving averages. So be aware of that, but the bias shifts back to the upside above the 200 hour moving average. What else can I say? The high prices from yesterday near the 124.71 area, sort of a random area level, would be the next target on the top side. Perhaps these lows through here, and this area. Once at 134.71, 134.78, get above that level, opens the door for further upside. We've got to move away from the 100, 200 hour moving averages. If we were able to do that, that would be more bullish. If we break below it, it'd be more bearish, but we need the momentum away from this level. These moving averages, we haven't been able to do it over the last few days with much success. So there you have it. Look at some of the major currency pairs. Sorry about that, folks, but it is what it is. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.